Hello, hello. This is London with Bitcoin Spike, VIP trader. Hope you're all doing well. We're going to go through some charts for VIP in the middle of the trading day now. What are we at? About a 1:30, 1:44 p.m. in 11, 12, 1, 2, actually 2:30 in already. It's 11:30 Pacific time. We're going to go over Bitcoin. Going to go over Tesla making a nice move today. SHIB making a nice move today. We'll look at the Nasdaq. We can look at several stocks or specific cryptos. Hope you're all doing well. Let me make sure that our VIP are here. This is kind of our daily huddle, and we hope that you are having a good or that you had a good week. It's a good way to finish this one off in terms of whatnot. Let me make sure that our VIP are here. I assume that you are. If someone will shout out to the Slack room and let our private room in the back know what's going on. I'd like to go over some of the indications that we had that we might have a good move on Tesla, a recoup move. That was nice today. Some of the indications that we might have gone lower today, which we did just a bit slightly here on Bitcoin. Okay, we'll talk about the details. I'm on the 15-minute time frame on Bitcoin. On the 30-minute time frame is probably the best level of interaction you're going to get on Tesla right now with the 20 moving average, midline, Bollinger Band in play, contact immediately now. So looking at SHIB, we covered SHIB. All I got to say about SHIB, I'm not a big altcoin fan, you guys know that, but our group, VIP, have made millions and millions and millions of dollars on SHIB, so it is what it is. We happen to fall in that niche where it was the right buttons hit at the right time, so SHIB is there. We've got NASDAQ down here in the bottom right. As we talk about like big hitting assets like Bitcoin and Tesla on the top left and right, we talk about NASDAQ, we talk about fundamental issues. I'll just say one thing about SHIB. It trades relatively technically. I just say it's sturdy technically. You find a pattern, it trades relatively well. And like I say, our group has made millions upon millions of dollars on SHIB. So, not from buying it early, from trading it. So it can handle some liquidity, surprisingly. So let's take a look at, you guys want to go through maybe Bitcoin first of all, and let me make sure that everybody knows that we're here. Hope you guys had a good trading week, right? It's not easy. It's not always easy. I know that you're busy. One of the things that we can talk about today, you see this notion that we would get into that trading is going to be accommodating to you. We focus on Tesla, for instance, while we're trading Bitcoin, because Tesla can move in the first 20 seconds of a market open, give you some volatility, give you a trade, let you kind of manage your morning. If you can catch a trade early on market open, you can let your Bitcoin positions or orders ride a bit. And this notion that people are going to show up in the market, and I've known a few people that can do this, okay? I like to do this. Show up in the market and in 10, 15 seconds, bam, it's over. Guys, the reality is that a lot of people spend a lot of time with the market. The more time you spend with it, it seems to reward you for that. You know that. So in the context of what we look at, there's a good balancing dynamic between something that's got a lot of volatility to it, like Tesla on a market open. And Tesla really is, guys, in terms of volatility, it just has those opportunities that we see, okay, that I see the traders, our traders, and that we specifically see. Bitcoin has a different dynamic. It's a little bit slower in terms of the evolution of the trades if you look at the cyclicality of it. Let's do that on Bitcoin real quickly as we see Tesla challenging up and through that specific 30-minute. Nice recovery on Tesla today. We hit that on the bottom just so that you know if you guys are paying attention to or not on QKD, our fire and ice. We hammered into this specific, it was on the 5-minute time frame. Nice hit down into that. We caught that drop today on our indicator. Congratulations. And guys, it's a calculative weighted kernel average, okay? It's a dynamic calculative kernel average. It's not overly complicated, but it's not overly simplistic to where everyone's using it as well. So we're excited about that. Let's see, what do we have in terms of Bitcoin? Just talking about the cyclicality of it, talking about some of the patterning that we see and we want to take advantage of. You know that we get chopped up in and out between time frames, between mixed signals on Bitcoin. What you need to look at, and just let's take this to the bank, right? What are the good moves on Bitcoin? 1, 2, 3, 4, right? 5, 6, 7, 8. We'll call that 8, 9, right? 10, 11, 12, 13, right? 14. So we have about 15 moves. Call it 10 to 15 moves in what amount of time here. Just in what amount of time? We've got 10 to 15 moves in 340 days. Okay, so that's about in par, looking for a major, and I'll say some of these are major moves. Some of these are kind of medium grade moves, but some of them, if you hit the move, you knock the lights out for the month, right? There's a lot of pressure on something like Bitcoin, though. If you're going to get a nice move, and I mean a nice move, right? Once a month, you got to catch the move. So there's a lot of pressure when you're looking at something like Bitcoin, and we can backtrack this through the entirety of Bitcoin. It's like you got to catch the move. There's a lot of pressure on that as we day trade, and you guys structure your lives, your families, the trade group, everything around that, just maintaining that semblance of mind. I don't hear people talking about that at all. It's like you're trading Bitcoin, great. It's like you got a trade every month. You have to catch it, period. So what's your plan B? What if you don't catch it? What if you didn't just catch the move up, right? It's two groups of people right now, right? In terms of, and we're fortunate we caught this, boom, to the upside, locked in profits at the top. Very nice, very appreciative of that in terms of that opportunity to trade this. But as we stack back, and you guys know, the difference is going to be made. Did you catch this move? Did you catch this, really the move up? This here, up and down. You're going to want to catch them. Did you catch it down? Did you catch it up? Did you catch these moves? Each and every one of these is a lot of pressure. Some people thrive under that pressure. Other people can't stand stand the fact is like, well, I missed this one, I have to get the next one. And sometimes it seems like the house, the house always wins, and it's like, where are my good cards? So I want to encourage you that there's probably a fix with your schedule, with your temperament, with whatever's going on. And one of the things we would look at would be something like a Tesla style coin. One thing asset I would not recommend, and pardon for that, definitely an asset. And you guys know, not financial advice, go to your broker. But in terms of what I see accommodating traders is the opportunity to trade and open. Now, if you don't trade equities, if you don't trade stocks, it seems like another planet. I understand 100%. That's another planet. You're not going there. You have zero interest in it. Same thing if you're trading equities and you're looking at crypto. Like, that's another planet. Those guys or that process, whatever it is, I don't go there. You're going to think this, but there may be a solution to the challenges which are inherent in trading, which you need to at least be open to. I mean, if you're in the first half of the book there in terms of you trying to plan out things, it's not quite working out. If the second half of the book can be full of an equation and it's real easy and it's essentially what you're already doing, be open to that in terms of, this is a good book, bam, close the cover, we got it. You got a good formula together. So Bitcoin doesn't always give us that price action within a time determinate. You guys know that, within a number of hours. One of the biggest challenges in crypto is you're trying to catch these moves. And I'm not selling equities, guys. I ain't selling them. That's not my goal here. But to look at Bitcoin and the immense amount of pressure it puts on you, and I'll say if equities aren't the solution for you in terms of trying to hone in or laser in on a time of day where you can capture some volatility with your skill set, if it's not equities, then look at the equation differently on Bitcoin. How can you, or whatever asset you're trading, how can you make sure that you're going to allow yourself some exposure to the upside, right? Given a nice retracement. What are the, and I thought of this last week, and I want to share it with you guys. When I talk about managed futures, I realize this, okay? I talk about managed futures quite a bit, okay? In terms of what would your exposure be? I'll draw a little bit of an off extension here. But what would your levels of exposure be if you were to, let's say, scale into shorts? We'll go longs, but if you were to scale into shorts, and into longs, all right? I brought up for the VIP last night the tweet where I let everybody know, hey, we're on a daily and a weekly green buy line. That was the bottom of Bitcoin, right? And I said, in addition, or as well, we're looking at the lower levels for laddering and scaling, right? So and I'm going to talk about this in terms of managed futures. It's not a discussion for everybody. The quick, easy answer, crowd definitely doesn't want to hear this. Okay, but I recognize one thing about managed futures. If, for instance, you're scaled in on shorts based upon an extension, this is not intro stuff, guys. If you don't get it now, keep listening, you'll get it. I promise you'll get it. Keep listening. Specific questions are welcome all the time. Let's just say that you have a short strategy. Let's also just say that you have let's go with a standard fib retracement from, let's just say from ground zero or 4,000 or 5,000. Let's just draw in some level here in terms of a managed futures. And I want to bring this up to you because this is the crux of, I think, how I'm communicating with you guys and girls, in terms of if we were to look at a specific managed futures, what does that mean? I want exposure. I want to ladder in. Okay, let's say another alternative to me participating in either Bitcoin or equities, or maybe both. What's the equation that's going to suit me the best? If I don't want to go to equities, right? How would I look at Bitcoin in terms of capturing, guaranteeing some upside potential to the upside, right? Some upside potential, guaranteed upside potential, structuring in cash and orders, right? At levels, right? And I will just say ladders and scales. These are the ladders in terms of your specific long entries would have been, right? Now, as we were to look at this, and I can bring it up, I don't know that I need to, but it's not to beat my chest about it. It's to say, hey, we had this zone in here, the bottom, period. And when I say ladders and scales, these are your ladders here, your ladders from this point right here. Your laddering in would be the specific price targets to the downside. You got it. We know that. Scaling would be ideally, though arguably not required, okay? Scaling would be having a larger amount of capital available for the lower orders, okay? Structured in scaled, heavily to the downside, okay? It's an option that you can look at. Now, in terms of this, what I realized yesterday is that I can say ladders and scales. I always say they're built for whales. A lot of money's made on managed futures, particularly if we're going to call it out right here at the bottom, at the low, right? And you guys saw that in the back. It's not to make, let's go this direction with this conversation. It's not to make anyone feel bad. I brought it up last night. I ran across it in Twitter. It's a great thing. It's like, yes, from this point and here beyond, we're looking for, in addition, all right, to this level, which was a buy line on the green buy line on the daily and the weekly confluent, right? We're looking, in addition, for lower opportunities to ladder and scale in. Now, as you look at that, I realize that if I throw up 20 of the specific, let's say, price targets, laddering in levels, and understand this, they would ideally be different. I would cut them out. Please pay attention. I would cut them and place them at a percentage differential in line with my leverage, okay? I would place in these orders. This is a quick fix example of what a ladder would look like. I have customized out a Fibonacci so that you can envision 20 layers. Okay, let's say from 6,000 to 16,000, 20 price targets. Ideally, I'm going to compute those actually within a percentage differential, okay? With a percentage differential that's tied in with my leverage, okay? So this is the notion that you can play off of instead. It's a straight line framework. I personally am going to tie in managed futures with a percentage drop in price that's tied to my leverage, okay? Think about that. Think about a percentage drop that's tied to my leverage amount. If I'm trading 100x, I want my percentage drop amount to be about at 1%, okay? I personally would rather trade a 100x position, 100 leverage, where I would rather trade it, okay? At the expiration of the position, okay, catch and release, meaning I'm never without a trade. You guys got this. I'm never without a trade. So I get a 1% drop on Bitcoin from, let's say, 15,005. 1% drop, that position technically liquidates, okay, at 1% at 100x, the position is gone, okay? or it starts costing me money to carry that, right? So I'm happy to release that at a 1% drop, not at a Fibonacci, okay? Not at a Fibonacci, okay? I want my specific levels laid out with a 1% drop all the way down. You have to get into some calculatives to set this up, right? It's not just standard. You're literally going to calculate out by spreadsheet or otherwise what your managed futures look like, okay? Now, if I'm at 50x, 2, I want it 2%. Okay, why? Because I want my order put in and placed. I want a guaranteed position on a managed future basis, and I'm going to tie in my leverage with a 2%. You guys got it? With a 2% drop. Why? What happens at a 2% drop at 50x? My position's gone. Or it starts costing me over and above my margin to carry that down. If you don't get this now, don't worry about it. Listen and re-listen. Specific questions are fine. But at 50x, right, I know that if I drop 2% at 50x, right, I'm going to get liquidated in that position. Not necessarily kicked out, forced out. I need to release that position, and I need to get into another position, right? I need to stack my orders at every 2% at 50x. Yes. So that what? I catch first, I catch my new position, and then I release, bam, if it's heading on the way down. Now, as we talk about this, and that's my preference, catch and release. The only risk, a few other risks that are indeterminate from this specific, I'll say this specific nuance, is that depending upon how tight your catch and release, meaning you catch the next trade while something's going down, and what happens? You catch the next order. You pick up your order before you release. So I'm saying catch and release policy. Just as familiar fishing lingo, right? But catch and release, meaning I catch the next trade and then I release the upside position that's costing me to carry down. The risk being maybe I wind up with 2 positions, right? Instead of this managed futures where I'm let's say this managed future protocol where I'm trying to ensure that I have some upside potential at any lower level. Pay attention. I'm going to catch the underside position. I want my order, lower order, to catch. Bam. I want to pick that up before I release the position that I'm carrying down. Okay? Now, that ensures, that guarantees that I have a position. You see, that's the point as I'm looking at prices. And I just went over this yesterday for VIP. As we look at the specific catching a position, I want to catch a position. You guys get this, catch and release. I'm going to catch a position here. Let's just say I were to catch a position here. Let's say that price drops to here. And let's say, what do I want to do? Price drops. I want to catch my next order here. Okay, I really want to catch it, and I'll just say I'll catch it just above here. Pay attention. I want to catch it before I release that upside position in that order, okay, to guarantee, to ensure, and that's the way that you're going to be dealing with your pricing and looking at your spread. You can be aggressive enough to where you don't have to fine-tune things with your spread, but you need to know how your exchange works. Capiche? You guys got that? Now, this is the issue, okay? Because I can show you guys in the back, I can show you the managed futures. I can show you, hey, well, there's the ladders and scales. Here we go. We're at 15.6. We're at 15.57, right? And we've got that tweet. We've got, hey, guys, we're at the green buy line. We ladder and scale in. This is perfect. In addition to this green buy line, we want a position here. It's a good time to buy, right? The notion is that you are guaranteeing yourself a carry-up feature. Absolutely. You're low. You're guaranteeing yourself a carry-up feature. Now, this is the moment where I tell you, I understand that it is calculatively, it is, let's say in terms of the process that you go through to do this and structure your orders in, it's not necessarily simple. You're talking about structuring in potentially 20 levels, and that might be a lot depending upon what level of leverage you're on. But you're talking about something that if you gave an exam to a bunch of people in business school, at a good business school, some people would get this wrong. Some people, if you ask them, hey, at a top business school, if you ask them all to do this, maybe the ones that didn't have time to study or just didn't understand it or it wasn't presented well, I don't know, or they're busy or maybe they just don't like the subject. But even at a business school, some people are going to get this wrong. Some people will get it right, and then some people will really, really just excel with it. And they can just rip these out. They can do the calculations. But I understand that there's enough process involved, not to say that anyone would be deficient, but between or careless. Let's just say the word careless. I don't want to study for that. I don't care. Like everybody's been there, right? But as you look at this, I understand the process involves quite a bit of, okay, just structure in 20 orders, no problem. If you haven't tried to do that at all, if you've never tried to schedule in orders at all, it's going to hit you like a ton of bricks that, yes, this is a process. This is a process that I need to get used to in terms of, let's just say in terms of if I want exposure, let me just practice this. Let me get into managed futures. Let me just get into managing and guaranteeing myself a level of upside potential and a position. Every single ladder, let's say ladder that level that we were to go down, price level we were to go down, I want to guarantee myself a level. Now, you could, and what I would suggest is that you put your orders in. Figure out the best way for you to compute them. If you want to do a flat dial in based on Fibonacci, it's easy, guys, okay? It's easy. You could do it on your Fibonaccis if you want to, your standard Fibonaccis, or you could go through and customize this to 0, 0.1, 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9, then 1. And really I have the increments at the 0.15, 0.25, 0.35, 0.45, so at every 0.05. I have an increment here, 0 to at 0.05 rather. So 0 at 0.05 into 100% gives me 20 levels. Okay, that's a 5% dictum on as we were to look at this on at a 100% let's say threshold. So I'm putting 5 into 100. I've got 20 levels. You can set your Fibonacci's up if you like, and you can. Clearly, you can save it as a template. You guys know that. Now, I would recommend instead that you go with a solution that ties in your leverage amount to your actual percentage lost, and you structure in a rationale, a framework to liquidate, to exit your position upon the liquidation of your margin, essentially on that specific level, okay? So if you are at 50x, I recommend you look at every 2%, all right? If you're at 100x, I recommend you try and do this with 1%. Set it up with a quarter, a literal quarter at every level, I don't care. Set it up somehow to where you can go through the process and you actually, I just recommend that you do this. You don't have to. You can recommend I can do something too, and if I think it's worthwhile, I'll try it, okay? I promise. I promise. And I really believe this is worthwhile, all right? So as you were to look at the specific, the goal here would be to make sure that you always have a position to the upside. You're going to structure in your orders, your laddering in at the specific price levels where, depending upon your leverage, you want to calculate a percentage loss of your structured price levels that gives you a zero value expiration of your margin of that upside, let's say that carry down order. As soon as it expires, get rid of it. Boom, pick up another level. Now, and we'll talk about some of the remnant considerations here, really primary considerations in getting into this level of a framework. When does this make sense? When does this ever make sense in the market? If and only if, to the extent you have what? You have an expectation of going back up here. Boom. All right? This makes sense anytime you have an expectation of recovering price. That's it. This, in terms of being long, and I kicked the shorts off here, that's fine. This specific, I'm going to tell you guys, this doesn't work if you're going down and you're staying down. It just doesn't. All right? You may have some opportunities to trade. You can scale into it at a differential. that's more aggressive based upon specific hit points and make it profitable. But the whole idea of this consideration in terms of managed futures, you have to have some potential for a recoup. You have got to get back up to where you initiated. I'll just keep it simple, to where you initiated your original orders. Okay? If you're going to ladder in, if you're going to guarantee long exposure, make sure, and when you do the math, you'll see it. When you do the calculations, if you run this in terms of going through the process, please go through it. Go through the process. Set up, I don't care if it's 10-cent trades. Don't do it with 1,000 or 2,000 or 10,000 or 100,000. Don't do it unless you've done it with a small amount of cash, okay, at each level. Prove to yourself, and this is what I wanted to talk to you before I really went into the details here. Prove to yourself that you can set up the orders, okay? It's like it's not exactly a math test. It's like a trade processing skill set. You have to put it together. I hate to say like a test or something, but when I thought about it the other day, I sat there and I thought, I can tell people to ladder and scale in. I can tell them that this is the best approach, but it's not something that's just naturally everyone's gonna be able to do it, no problem. It's a lot of processing. It's a lot of calculatives. You'll find a way to accommodate the process as you go through it. And I just really want you all, because it doesn't do any good for me to sit in a room with VIP, with our trade group, and me to point out and say, hey, and this is the issue. We had a greater than 50%, you guys know how we are, those greater than 50% probability of going a bit lower here. Absolutely. However, those moves in the market, and you'll find the 60% moves, well, it's just 60% probable we're going down there, or some of those will burn and wreck the people on the side of the probability. Some of the best moves in the market, you'll miss them if you have no exposure. And it was a great specific reminder to us, I really believe at the bottom, that we looked at Bitcoin in terms of that 50% fractional probability, that 50% max probability that we looked at, and it was right on the line. You guys can review the tweet, look at it. I'm not beating my chest. What I am doing is saying it doesn't do us any good, or me any good, to continually refer to a process that you don't want to be involved in, that you don't want to. I hate to say that you don't want to. It's like, no, everyone wanted to be involved in it. I know that, but it's complicated enough. I want to encourage you today, after reviewing just a bit of the essential framework of it. You can re-listen to this. If you have questions, ask me. Do it with 10 cents. I don't care. Do it with $1 at each level. Okay, start with a dollar, build in, additional dollars if you want to. The point is, I want you to process through. If you didn't ladder and scale in here, just start it. And I mean, in addition to the other trades, some of you guys are doing phenomenally well. Most of the group is doing really, really well. We're doing really great. I'm very, very appreciative of that opportunity to trade and do well and be a part of the markets. As I were to readdress something, I just need to address it so that you guys understand. It's like, please go through the practice, because I realize it's not easy. It may not be something that you want to do. If you need help on it, get with me. Okay, get with me. I promise I can go through the math on it. Okay, I promise I can make that make some sense if it's not making much sense. I realize it's not necessarily it's not basic 101 trading. It's not, but the benefits of it are far there in excess of what I would consider to be just standard kind of operating standard operating ability to operate or returns expected in the market. So as much of a pain as it seems like it is, I really believe it brings a lot of value, and I want you guys to not just look at something. I don't want you to look at anything again. If I were to bring this up again in terms of ladders and scales down at the exact bottom of Bitcoin, and it's like, well, no one wants to do that. I realize it's complicated. That's what I thought of yesterday. I'm like, this stuff's complicated, man. You got, I'm telling people to just go ahead and throw 20 orders in at percentage differential thresholds of either 1% or 2%, or it could be whatever percentage it is, based upon, if you're at 20x, you would be at 5%, right? Upon the expiration or liquidation of your upside order, to catch a specific trade before you release that upside order in a carry down, I get it. It's not real simple. It's easier just to look at a pattern and hit a button. I wanted to bring that level of value to you, and I want you guys to be that sophisticated in the market. And to guys, there's no harm. Just throw in some orders right here, okay? And I'm not saying like we're just going to scream to the upside. That's just it. It's time to ladder and scale in here heavily. No, guys. What I'm saying is I don't want you to miss another opportunity like this at the bottom of Bitcoin, where we call for some exposure, technically indicated, and with, of course, heavy reserve capital with additional levels there under. And I know you guys are fit to that challenge, and most of you have already done this exercise, and you realize the ones who have done it's like, oh, it's London's telling truth. It's not necessarily easy, but if you want to do it, I know that you can do it. So that's where we're at on that. And let me see what we're doing on the stream here. Let's see what we got. Bounce off macro support level. Good. What's up, J-Mac? What's up, Shane? How you doing, brother? Good. We'll say Shane. What's up? Nice to see you, Shane. And we're talking about managed futures. Is for really our group. And just to let you know, if you want to join our group, that's fantastic. We would love to have you. If you trade, if you really want to trade, we have a specific hedge room. You guys know that hedge room. Yeah, there we go. So that point in question, the 30. Let's look at the 30 and how it rounded out. Let's see where we're at. So we're at in terms of, appreciate the heads up, Shane. Thanks for the technical heads up. So we've got we're about 12 o'clock here in, and this is a great. This will be good for us to go through real quickly. So in terms of the bottom formation, we found out, let's go over Tesla real quickly. We went over managed futures. If it's new to you guys, get some exposure to it. Look it up. See if you can crawl through some information on managed futures. What is that? Okay, you should find some affiliations with hedge funds. Otherwise, you should find a bit of an overlap there in terms of what some of the big top dogs are doing. It should be an interesting journey for you. We do it, and I just want to make sure that you guys get all the input you need on the issue. Looking at Tesla, and we are working on, and guys, this is a pre-prototype, but I'm looking at flat bottom supports, flat top resistances here. It's not perfectly crafted out. It's not supposed to be perfect yet, but this will be our new indicator set or suite that we're putting together. What I'm interested in is return to flat top resistances. You guys know this in the market. We trade these all the time. They just come to fruition, right? They just come to bear so frequently. If you're looking at the 15-minute time frame, you see this perfect flat top resistance. I always tell VIP in the back, we see this commonly in the market. And it seems like it happens almost every time, but I don't really talk about certainties with it or probabilities in excess of like 70%. And you know my threshold, if we're talking about a probability in excess of 30, let's say a 30-70 split or a 40-60 in your favor. I'll say it like that, in your favor. I really make a threshold of 75% wanting to take that home, period. That's our trade. 75%, that's our trade, period. 85%, that's our trade. You guys go deal with the 60 to 65%, and I mean it, and you guys know it, right? If you're looking at a pattern that trades at a 60 to 65%, take it. Take it. That's as close to 50-50 as something I really don't want, unless we're on a critical, let's say a pivotal technical level and we've got a tight stop loss. I'm just not real excited about a 50-50 split. For me is just about the same as a 60 to 65. So we're, what we say, guys, we are very protective of our 70+% trades in the market. We go after them, and that's what makes the difference. Us as a trade group, when the rest of the world's trying to figure out what is trading, we're in the process of trying to kill it. And a lot of times we're in the back room killing it on some patterns that not everybody's paying attention to. You got to find that edge. Bolkowski, you guys know, and he's a great guy. I communicate with him personally. Encyclopedia of chart patterns. If you find anybody who's done more work in the market at all, okay, empirically driven than Bolkowski, you let us know, because we have looked far and wide, and we don't have anybody on the map or radar that's done more work than Bolkowski at an empirical level, okay? And just empirical meaning he's looked at all the data for the preceding 40+ years intensively, and there before all the market data, and is extremely well published. He's a good guy, and yeah, I'm not selling his books, but the experience of knowing precisely what you're trading is a big issue, right? So, yeah, Tesla with a nice drop today. We've been kind of cruising sideways. 3-minute has been real solid. You guys know the 3-minute time frame has been super solid in terms of the framework. And I can share this with you, or I can just take them off for now. As we look at any kind of flat tops on the market, this is a pre-prototype. But I want to know, is there a preceding demand interest here, a preceding level of interest, let's say a flat top on any time frame? Now, I have these geared right now, essentially I have these geared towards the actual candle framework. So it's messy, it's almost intentionally so. We're in the process. We will clean it up. But that's what I'm interested in right now. Buyers present in the market. If they're present in the market, typically what do they like to do? Buyers like to come up to a specific level and release, right? So when you have a flat top, the majority of flat tops are beaten to the upside. It's an indication that buyers have come into the market. They're at a level, they like their profit, and bam, they release. Now, if they can go and do that again, bam, at another, let's say at another pivot in the market, it's just an indication that buyers are in the market, period. So when you see a flat top resistance, first thing you need to think is potential buyers in the market. When you see a flat bottom support, what's the first thing that you need to say? Well, there's a seller interest that's been defined in the market, right? Now, we get interested below. Let's say, for instance, most people will do part of the equation. What's the first part of the equation? It's, well, if I have a flat bottom support, a descending triangle, great. I want to short it. We are on the flip side of the equation. We like to become involved underneath the descending triangle. And I encourage you to look at Bulkowski, look at the percentage probabilities of your moving 50% of that descending triangle versus moving the entirety, let's say that full amplitude 100%. Just a reminder, VIP, you guys, make sure that you're plugged into the probabilities of fractional completions. And you guys know that, but they're just like what I went through on Bitcoin. Absolutely, looking at Bitcoin with that 50% completion of the specific half diamond formation. We were right at that 50. That was the low of Bitcoin. So don't forget just those specific probabilities. We deal with them. It's like old hat with us. If you're VIP and haven't been trading much recently, just make sure that you're plugged in to Bulkowski, without a doubt, guys. And I wouldn't just, there's no reason in the world for me to tell you guys that other than the fact it makes a huge difference. I think you guys would agree. So we're constantly looking at what? Expanding volatility in the form of a descending broadening wedge or a bump and run reversal, without a doubt. If I ever draw this peak through the left-hand side here, just forget about this, okay? You're gonna completely forget about this portion. I'm looking for 1, 2, 3, 4, 2 hits along resistance, 2 hits along support, okay? And what am I trying to identify? These 2 hits along support, expanding with these 2 hits along the level of resistance, increased volatility. I don't mind if we drop out of this. Some of the best pickups in the market are on an expanding wedge formation. Expanding broadening wedge. We call them a bell formation. We call them bells because between the bump and run reversal, which is differentiated how? Bump and run reversal requires this lead in. Then we like this move here to be twice, okay? And it can go down this direction as well. It's fine. It doesn't have to breach level of support for a bump and run, but we like the ratio of 1 to 2, okay? So in terms of looking for an ideal bump and run reversal with a lead in and a specific bump would be the move back to the level of resistance. We're looking for a 1 to 2, okay? So we would look for a 1 to 2 ratio ideally for us to really look at, let's say, for us to really think that a pattern may start to, or has an expectation of performing as well as it could, okay? As we're assessing a bump and run, and literally in terms of that, we could outline the range of the specific lead in, and I can just double it. This is just a tactic that I would say would be beneficial for you to look at that 1 to 2 ratio, of at least having a 1 to 2 ratio in any kind of a bump and run assessment between this lead-in portion. And the lead-in portion is going to be whatever structure gives you this expanding support and expanding therewith, or it's going to be descending support, expanding along with, expanding against that level of resistance. So essentially what we're looking for And you guys know this. It's just in terms of probability plays, it's what we trade. They trade very well. Without a doubt, it's one of the highest percentage probability trades that you can find in the market, and you guys know that. If you trade them, you already know, and if you don't, go try it out. See what you think. But we want this. That's a lead in. What do we want? We want it to hammer, bam, to the downside, right? And then we want to recoup up and boom, power up and through. These make money. Now, as you look at this, they can be dangerous. They can be big time dangerous, but these can just rocket. And when you see price action, here we have some issues on a VIP here, like we rock the bells is what we do. They can be dangerous. But we will live on the wild side, bam, to the upside, where the rest of the market doesn't quite know what's going on. We are dialed in to this specific, and the traders that I care about, I will tell them to go trade 500 of these if you can. You guys know this, right? Where are we at on the 4 hourly? What's the hidden agenda on the 4 hourly? The hidden agenda on the 4 hourly is the following. Pay attention. This is macro Tesla, just so we know. This is and this is where they can be dangerous. But you see the lead-in portion here. Now you can find half a dozen patterns, so we can talk about them all, guys. But looking at this lead-in portion here, and we have a lot of other macro dynamics in play, but I just tell you, while the rest of the market is looking for a tap out in here based on this specific bull flag that we found, we in our group are comfortably, guys, we are comfortably, and you know this, comfortably parked at expectation of reaching this top line resistance. True. Nice moves. Nice moves. So that's more about our group maybe than you guys need to be reminded of, because like that's old hat. But when you see some dynamic like this trying to recoup, and let me take that purple off the background, just understand that's on the macro that's in play. If you're not seeing that in your charts, if you're not diagnosing that pattern structure in your charts, you're going to be operating at a deficit. I'll just say particularly against groups like ours that are. So I'm sharing that information with VIP so you guys know it is a competitive edge in the market without a doubt. Now, what we would be trying to identify of anything that just wants to crawl up and along, right? And what did we, last night I wanted to put some information together. If you're just tuning in and you didn't catch the first part of the stream today, I want to re-encourage you to watch that on Managed Futures to make sure that you're plugged in, okay, to what all was discussed. It was a very important discussion. I wanted to have it with you guys, and it's a critical, just something I critically wanted to discuss with all of you, okay? Now, as we were to look at pattern formations, now we talked about, first of all, like Tesla, how it can be, or stocks can be an accommodation, let's say some sort of nearly a reprieve for crypto that is just taking all of your time. Like Bitcoin could move at any point in time, 3 a.m., 4 a.m., or hopefully, at a time that's accommodating. But there are only so many moves to catch in a 24-hour extended time period. Let's say in your day, 24 hours, you have the challenge of staying awake the whole time to catch the one move a month that's going to make a difference in your account. That's a lot of pressure, guys. So I wound up going through not only equities as something to look at, okay, just something to look at. If you have the skill set already, look at equities. On the flip side, if you're into equities, I recommend that you look at cryptos. And one of my best friends, he's a very prominent, very prominent wealth advisor. And I was discussing with him, he was so funny. He's like, I was saying, I don't know what to say. I talk about all this crypto stuff and everything else. He says, well, you just need to tell everyone that it could be completely worthless. And I was like, well, okay, great. He's an extremely prominent. If you guys knew who he was, you would laugh. But he told me that. I'm like, well, that was pretty easy. That's all you got to say. So in terms of that, we know it's great trading, but that's kind of it's off the cuff. He's a funny guy. He has some huge, very big wealth clients. In terms of his clientele, it's funny. So what we look at to get from this level of support to the level of resistance, I'll tell you, we're always looking for a flat top resistance. You know this. We're always looking for something to manage our expectations, some sort of a some sort of a target feature to the upside. But we're prepared. We trade these enough. We're just not surprised when we wind up getting something that continues to grind up and along. The easiest way for us to come into, I'd say, some sort of an agreement, okay? Some sort of an agreement is either a target function to the upside. We're going to use extensions. It's easy stuff, guys. I want the amplitude from the low to the high. Bam, carry it over. I'm either looking for, let's say, a 50% on whatever pattern I come into contact with. Either looking for a maximum probability 50% move, right? Meaning most of these patterns will go to 50%. So I can kind of chill out a little bit, right? I can kind of chill out knowing most of these patterns are going to go up to a 50%. Now, I'd want to really structure in and not do a quick draw on this and make sure we've really got the dynamics for an ascending triangle because it's differentiated, etc. But I'll bring that up as one of the ways that we can get up to this level of resistance, right? We have a pattern framework, and we're going to look at least at that 50% threshold. Okay, that 50% threshold is big. The second, and we really, as we were to look at this, we had Tesla's been throwing all kinds of cup and handles at people, right? She loves it. You guys know this. She'll start off with a move. She'll either reverse, she'll give you a good buying opportunity or shorting opportunity, or she'll just keep going. And then she likes to just grind along, and she just loves cup and handles, doesn't she? In the context thereof, just as a reminder to VIP, what's one of our favorite patterns? Our favorite patterns to trade are specific, I'd say specific fan framework, fan reversals that we would look at. We want to find a seat, and they can be a bit challenging to identify, but we want to find a seat, right? The seat's going to be essentially this, the seat or the focal, the anchor of whatever array function we can come into grips with here. Each level of the fan needs to accomplish what? And we can find a better example than this, but as I'm trying to identify what is going to raise our probability here of going and continuing to the upside, it's going to be what? It's going to be a pattern. We're going to be looking at the 50% probability to the upside. Yes. B, if we don't find a standard pattern, let's say an ascending triangle, cup and handle, guys, if you're looking at a symmetrical triangle, we had one of those today on Tesla, or you could have double bottom, et cetera, et cetera. All the standard features. Look for something that's grinding up and along like a fan pattern. Let's go to, if I can, to Sheeb real quickly. Sheeb doing well. Sheeb had that fan pattern ongoing. Just to talk about it. Boom. Right? This level of resistance from that focal anchor point, that specific, we would call it essentially the seat of the fan. What we saw was, and we brought this last night, I brought this to you guys, trade op, right? Trade opportunity. As we were to look at, this is a great example of a fan. When we're crawling back up on a broadening wedge with a bell pattern formation, a bump and run or whatnot, as we were to see price continue to just escalate in a parabolic fashion, or at least a grinding up and along, the fan for me is just the best, right? Because everyone in the market sees it. If you're not used to drawing them out, make sure that you see a level of resistance that's reconfirmed as a level of support. Boom. That what is, we have another breakout, a reconfirmation support, breakout, support, breakout. It's just climbing up in some, I'd say, a fashion that you wouldn't necessarily know what's going on unless you're looking for a fan. You guys know that. So New York Institute of Finance, NYIF, where pro traders, Wall Street traders go to school. They're the ones that will equip you well. New York Institute of Finance, okay? They've got books, publications, Murphy. You guys make sure that you have those materials on hand. VIP, I know you have that information, but it's not just a Johnny-come-lately idea. New York Institute of Finance, along with Volkowski, is what we focus on. That's the best materials that we can suggest that anyone use, without a doubt. So the difficulty with, and we need to say this as a group, because as we focus on max probability trades, as I'm going to be looking at any type of an expansion framework here, 72% of the time, we're going to break this top level of resistance. Now, the difficulty is in a real aggressive downward trajectory market, we're going to see some of these really fail hard. And it's difficult if you forget about your natural levels of resistance. If you were to look at, let's say, if we plug back into and really, let's look at that 30-minute. 30-minute, I always say friend or foe, right? 30-minute can be your best friend. It can be a miserable experience as well. In terms of the 30-minute, they can give, she can give you cross signals. She can get just 30-minute friend or foe, we say all the time. Now, as we were to look at like crossing over the 20 moving average, we would like, and the market's looking at, well, this top side band on the specific Bollinger Band, that second standard deviation to the upside, is a technical target that Wall Street's going to look at. Major players are going to look at. You guys know that. So to breach up and over, to not fulfill the specific top side band target, I will say this. I think the 15-minute performed very nicely. Let's take a look at the 15 minutes today, because that performed nicely, and we inventory the specifics as we were to look at, as you guys understand what you're trading. If you're assessing, treat it like an assessment. You know, we're gonna take some fine detailed notes here on how Tesla is going to perform. It's going to be crossovers like this of the 20 moving average on the 15-minute that we register, boom, re-hit on into 20 moving average, and a completion up to, solid completion up to that topside band. So 15-minute has been solid in that regard. You see the 15-minute I have lined out in green and red, up and over or under the specific 20 moving average, essentially. So you can get a visually you can see very quickly what we're looking at with some sort of a back testing involved. Okay, you can see crossover hit. You can see crossover hit. You can see an attempted crossover hit. So the 15 minutes been your it's been the poster time frame. It's been nice, right? 30 minutes, you can see a little bit of frustration in here. You can see also obviously the frustration here. It just looks, it's been decent here. Nice completion to the upside. We had this frustration here. So the 30 minutes is a lot less accommodating. You guys can just see that in terms of, let me get rid of this here. And shout out to all the VIP. Hope you guys are doing well. But as we were to look at a little bit of an over-under just performance, the 30-minute is a little less accommodating. And you know, as we look at the 15-minute, it's been more productive to focus on that 15 minutes. We did have that 15-minute notified in the back today. Congrats to anybody who entered on the, and this is a very important point today. Let's go through this as well. On the specific 20 moving average, right? After you get a long signal, we crossed over. Fantastic. What's the number one thing that traders should be doing? Okay. We see this frequently. If you have a nice underwriting entry, no problem. If you're heading up to, let's say, an upside target. But as we were to look at an entry, first, you got your signal. Cool. Second of all, where's your entry? Your entry's on your 20 moving average. Potentially, we know orders are stacked at that level, right? So when you see something that flies over even a moving average that you're trading or whatnot, one is getting a signal. Two is negotiating your specific entry. And now you may have orders stacked, maybe trading on Fibonacci's, et cetera, but as you frequently see a crossover, whatever the crossover is that you're trading, always be prepared to not just get the signal, but also to structure and navigate in on your trade. That's critical, and the guys and girls who are doing that are doing better, I guarantee. And if you're not doing well, open yourself to doing that, okay? So you want the signal? Yes, everybody wants the signals. The signal can be completely useless. You know, really twofold here. It can be completely useless. And we've had this upward slanting channel. I don't want to call it necessarily a bear flag, but we've had it all day long. So let's throw it on the map, right? Everybody's been looking at it. Yep, you got it. Okay. So we're trying to get this thing to go up. The guys who ran this sucker home from our bull flag below, it's like, yeah, every bear flag is like, we don't need to really talk about that. It's staring everybody in the face. But anyway. We've got this cross level of support as we talk about any kind of bullish indications or indications of strength here. We do have this cross indication in terms of just a demand level here preceding pivot that we're paying attention to. That's on the macro, right? And this up here, great area to lock in profits, which I made sure guys and girls in the back did at this level. So you may be coasting at this point in time and working on just the number of trades that you're giving into Tesla if you're new to it or otherwise. So it's been a decent week trading in terms of Tesla. What we will let's see, in terms of that, I was going to go through and I need to finish that thought. It's very important. In terms of the signal, you get the signal, right? Then you need to worry about, I guess some of it's just pull the trigger. Just, go to a skeet range, have them throw a skeet in every direction, turn around, just shoot. Bam, I got a signal. No, you need to get your signal and match up your entry with whatever your signal is in the market. However you're determining your signals, you need to have that tandem together. You need to know what your signal is, and then you need to know what is your entry strategy, right? It may be on a flat level demand basis. It may be on a Fibonacci basis. It may be you may be in an order, as we talked about, managed futures or otherwise. And futures, guys, are just futures. You guys know futures, obviously. So if we were to look at, let's just go with standard Fibonacci's, that may be your approach. And like, I don't need to really worry about my specific entry tactics because I just set my orders and I allow it to flow. If you're actively trading a signal, you're getting a signal either through a crossover, either through I would just say primarily crossover or a change in condition, etc. Make sure you have that component together. It makes a huge difference. You know this. Yes, you got your signal and now you execute your trade entry strategy. Okay, because you can have a long signal and it can be telling you to pick up, like we're going right now to the 15-minute is a perfect example of this. We had a long signal on the crossover of the 20 moving average, and bam, we had an entry lower to execute that signal to the upside standard deviation. So here is where the signal fired on crossover of the 20 moving average, okay? But the traders, and we know this, stack orders at that 20 after the crossover, big time. So this is a critical element. As important as you would look at, you can look at, and it's interesting, let this register, because you can look at a set of signals on a chart, guys, and you can look at it and say, oh man, those are great signals. Man, that would work perfect, right? That would just work perfect. You can be beaten by signals that don't look good at all. You could be beaten by a completely different set of signals that you would look at and be like, I would never trade that. That's awful. But they may beat your signals and your overall return if that second dynamic is in play. Like, well, no, we're in a long condition, but I need to, if the person says, for instance, I need to structure in specifically after, let's say I get a long signal up here and I need to actually structure it in here. We have a variable line, capital exposure line, where we do that all the time. And it may look like, man, that was a miserable long condition, but what the long is telling us is negotiate in a position, right? Always work on that entry strategy. That's just the second, just think how intelligent that is, guys, that you're getting a signal. It's not a just turn and shoot, pull the trigger. It's now I work on my entry strategy. So great job on the 15 minutes today. We did that in the back. And you guys know on the crossover, it's pro level stuff, guys. New York Institute of Finance, where Wall Street goes to school, literally. So when we're doing a crossover like this, and we're going to backtest, we're going to assess just the level of just how productive it's been, how successful the crossover strategy has been. Don't ever just trade into the blind without doing a bit of back testing. You guys know that. Let's see what else we have going on. So we've got this hold right now. This would be a hold, just so we talk about it, on Tesla of that 20 moving average. Yeah, the 20 on the 15-minute time frame. So this would be a hold both of this level of support on the flag type formation. Yes, so this is a critical level here as we're kind of winding down into. That's a tough. That's tough, guys. You want to hold your trade through the weekend. This is why people day trade, right? What's day trade? What does it really mean? It's people who close their trades out at the end of the day, unless you've got a big underwriting position or overriding position, whether or not you're long or short. That's the whole idea, right? Just close it out, chill out. If you look at this specific. If you look at this, that's just me, guys. This is what we do. But if you look at the specific, so that 20 moving average on the 15 is lining up with the bottom side band on the 5 minute. Okay, so you're seeing some confluence in terms of of that framework. Always go cross time frame, of course. But this is it's not a comfortable hold for me personally. I'll just tell you what my read is. It's just not a real comfortable hold through the weekend on something that is demonstrating a bearish type flag. In spite thereof, and I'd say the contradiction would be, as we're closing out, looking at the bell pattern framework, that bump and run potential reversal. I would rather pick up on Monday morning, as we will, and hit into Tesla. Let's see what we got here. Elliott theory for next 5 wave on this Tesla move. Good question. Bull flag forming on daily trend. Yeah, that's right. You got it right, Shane. Yeah, bull flag forming on the daily trend. Tesla, we could go on and on, Shane, but yeah, that's the right. You got it right. What do we go? Heinlein, I just want to say, I've been following you for almost from day one and have to say you are one of the best technical traders I've come across and have learned a lot from you. Hey, I appreciate that, Mike. I know you. Yeah, absolutely. We know that you've been around for a while. That's fantastic. I appreciate you chiming in like that. We put a lot of work into it. It's not easy, and it doesn't always flow really, really well. A lot of setup, a lot of stuff going on. We've got build out for headquarters. You guys know we take this seriously. We treat it like a business, and it's not just the worst thing that you can just believe is that this is all just easy. Guys, you're getting in line with a lot of pro level traders at desks who make a big, good living at this and have spent years doing this. I know a lot of them, guys, a lot of the best ones. I've hired literally like the #1 from New York. Those guys, they don't play around, you know. So the hype train, the kind of that dream that just is, you know, that people want to achieve in the market, the market will reward you when you put in the hard work, and you guys know that. It's just a longer process than what most people would be led to believe. The more exciting and more outrageous it is, the easier that it is. Just look at it like, I don't think it's supposed to be like that. You can see a lot of people that really, really work hard in the markets, and it's very rewarding. And I'll encourage you with that aspect as well. It's very, very rewarding if you put the time and effort and energy in. It's a pleasure just to bring you guys a little bit. I'll recommend again that you watch the beginning. Watch the beginning of the stream on managed futures, because I talk about it frequently, and I understand the challenges involved in it. Okay, so we'll work on putting together maybe some what do you guys, just some videos based on some highly probable technical moves. And I haven't been doing that many specific videos recently because I've been waiting for the highly probable technical moves. I don't want to get caught up in the chop. You guys know that. If we were to look at, for instance, like Bitcoin right now, we have, you know, it's not easy street. We have this preceding, and these are all auto-generated with our new indicator, but looking at a preceding level of support, cut across, and we want this to roll up. We need the momentum. What is it, the weekly right now? What are we doing with the weekly? Give me a break. The weekly momentum, this is the biggest side swipe in the market. If you paid attention to the way up here, what had us on the way up here? What gave us an indication we'd be going up? The weekly, right? The weekly momentum, MACD. It was huge. It was everything, period. If you followed the weekly MACD, you caught this move. If you ignored it, it made you pay. The fact is now the weekly is just dropping. So for people who paid attention to this move, they're like, come on, Bitcoin, don't do that. You know, we can rely on you on the way up, weekly MACD. And you're going to tell us now that we're going to have to go against you if we're going to continue to go up. And in terms of a divergence, it's just, it's a lot to ask of the traders, guys, to just divorce yourself of a really solid, proven technical like that, which just literally caught the bottom, right? So we'll put the work in. You guys know that. Looks like, guys, we're about to close out, and I just wanted to bring you a bit of information. We looked like we were doing well on a few, just on a move on Tesla. Be prepared anytime you see it in the market. Just be prepared for this. Lock and load, guys, in terms of this, in terms of your ammo that you bring to the market. Be prepared for a return to a flat top resistance. Bam. At any point in the market, always be prepared for a return to a flat top resistance. You guys know this, but it just doesn't go without saying it's one of the most consistent features that we see blended and even blinded, we'll just say blended through the markets and all the other patterns, be they contradictory or otherwise. I don't want to use as a framework blinded, but you can get so caught up in the myriad of different patterns and the mixed signals. The most solid framework that we see consistently in our group, cross asset, is flat top resistance. We commonly see a return back to that preceding flat top resistance. So guys, never overexposed. Keep logging your trades. Keep hammering into like 100 rounds. If you're doing that, keep hammering into the markets. We'll be in the back as always. And normally when I stream, I've already brought a lot of the trades in the back into VIP. So it's something that we're following up on, and we welcome all you guys who want to beat the market to join us in that, because we've got some just fantastic traders that are really doing well. We're trading, and we're very fortunate to be able to trade, and we're fortunate to have you guys here today. We'll talk to you guys soon. I hope you have a great VIP weekend. This is London with